Yeah, good evening to all the dear viewers of this second short webinar by CA. As you all are aware, death in the family is a painful incident, and in the grievance process, many fail to make good the compliance that is required under the GST on account of death of a proprietor who is GST registered. So, on behalf of CA, I, CA Amar V. Meherwade, member of Indirect Tax Committee, welcome you all to this short webinar on compliance under GST post-death of a proprietor. I welcome CA Arup Dasgupta, who is the expert speaker of this webinar today. I request the attendees to raise their questions in the Q&A tab available, and the questions shall be presented to the speaker at the end of the session for his views. Participants are requested to take the questions by selecting all panelists drop-down option. As you are aware, this is a short webinar of 45 minutes. So the question answer session will start after 45 minutes. So now I would like to give a short introduction of today's speaker, Mr. Arup Dasgupta from Kolkata, which is also known as the City of Joy. So Mr. Arup Dasgupta is a practicing chartered accountant having CA, CS, CISA and Diploma in IFRS from ACCA UK as to the qualifications to his credit. He has completed his CA in the year 2000 and is having over 2 decades of experience in tax laws and other allied laws. In 2002, Mr. Arup started his career with Bishwas Dasgupta Datta and Roy, a mid-sized CA firm, as a partner. Then later on in 2009, he joined Rediffusion, a leading advertisement agency, as a general manager finance. Then later in 2012, Mr. Arup left Rediffusion to set up his own practice, primarily handling litigations and advisory services. And after the introduction of GST in 2017, he has put on many hats as implementer, advisor, trainer, compliance consultant, litigation consultant, and also as advisor to government and other trade bodies on GST issues. He has hands-on experience in providing opinion and advisory services to leading corporates, carrying out strategic reviews of business processes to evaluate the GST implementations, filing of returns, reply to show cause notices, undertaking litigation services, and representations before adjudicating authorities, appellate authorities, and CESAT. He was a co-opted member of IDTC EIRC for the financial year 1920. Apart from that, he is also a member of EIFTP, BCAS, CGPI, and IDTPF. He has trained students, professionals, senior government officers, professional bodies, and trade bodies on GST and other IDT related topics across multiple states in India. He is also a faculty on GST with the ICAI and some other leading universities. So he has been in the indirect tax practice and presently involved as a in mentoring the startups, and with his exposure of over 20 years, he is now concentrating on compliance, taxation, and business restructuring. With this brief introduction, I would request CA Arup Dasgupta to please take up the most wanted seminar on compliance under GST post death of a proprietor. Over to you, sir.
Thank you, sir. Thank you for the warm welcome. And I also thank Karnataka State Chartered Accountants Association for giving me this wonderful opportunity to share with you the knowledge that I have gathered during my last 3 years of experience on this particular subject, wherein death of proprietor happens, because this was when I got the first show cause notice on this particular aspect. It was a new thing to me. So on this topic, from then since I have been handling litigations on this particular area. And so giving me an opportunity to discuss on this particular thing out of my practical experiences. I would also like to thank CA Mukul for actually helping me with the technicalities behind the webinar. So now, since it's a wonderful concept of short webinar, so I would like straight away jump into the topic today. So as was shared by sir, that death in the family is in fact a very difficult thing to cope up with. And on top of that, the last thing that people keep in their mind is how to handle the compliances relating to the taxation aspects. And GST being a very new concept, so this is very new thing which is uncertain for many people. They don't know what to do, where to go, and how to go about it. So today we are going to discuss in threadbare form, and I'll try my best to share as much as possible on the topic. But if I have left out with anything, then you have the privilege of giving the question so that we can take it in the question and answer session. So I would just start with the words of Benjamin Franklin when he said that our new constitution is ready, is now established and has an appearance that promises permanency. But in this world, nothing can be said to be certain except death and taxes. So today we are going to discuss about two things, death and taxes together, because we have the idea that the person has passed away. So after this, what could be left? What has to be done? We don't know. Whatever has gone is gone. So let it be like that. We have got clients who have told us, his uncle, like, or sir, that we have already, my father has passed away. So now we don't want to know anything about the business. So it is as it is, just keep it. We don't want to fulfill any of the formalities. But then we try to make them educate. We educate them with the agenda as in what to do, why they should do the compliances, and how they should do it, how it's going to affect them in the later part, of their lives if they don't do the compliances right now. So what will be our discussion today? Today we are going to discuss on this particular thing, which is options available to legal heir. The process for registration that needs to be taken in, because here we need to guide our clients to take care of certain important things when they are taking the registrations, okay, for the new business, when they want to continue with the business. Process for cancellation. Again, when you are cancelling the registration of the deceased proprietor, you need to be careful about certain do's and don'ts. So what are those things? That also we are going to discuss. About ITC reversal or transfer. As we know, the ITC is availed by the proprietor when he was alive. But after he has passed away, there is an element of ITC that is remaining in his, the stock that he has or the capital goods that he was using. So the ITC in the stock or the capital good that needs to be reversed and paid back to the government. So how do we do that? Then the payment of assessed dues of the deceased. This is another important thing. When the deceased was alive, he got a show cause notice, say for a mismatch between GST Tier 1 and the 3B. He had shown certain sale in GST Tier 1, but he did not show it in 3B. He did not pay the tax. So now there is a notice, show cause notice, and there is an order, there is a demand. So how do we pay that? And who has to pay that and how? Then the next thing is refund of ITC and the balance in the cash ledger. Okay. So, and how do, there is a ITC refund that I am supposed to get, and whether I'm eligible to get all the ITC as refund. And if I am having some balance in the cash ledger, how do I get refund of that? That is the next question that comes to our mind. And finally, if I am transferring the business, then what would be the GST impact of transferring the business? Okay, how do I handle it? What are the things that I need to keep in mind? So, what are the two options that are available to the proprietor when the deceased proprietor has passed away? So, the legal heir has the options of either closing down the business or to continue with the same business. Now, whether he will close down the business or he wants to continue with the business will depend upon the business acumen and the business risk that the legal heir wants to take. But apart from that, we as chartered accountants or tax professionals or advocates, we also have a responsibility of informing the legal heir of the obligations and the liabilities that may arise at a future date if he wants to continue the business, and also if he does not want to continue the business. So what could be the obligations and liabilities that needs to be made clear to him? So we will go two options, separately. So the first option we are going to discuss is when the legal heir wants to actually close down the business. Okay. So what are the practical situations? He or she is an IT professional, and say her father's business is of wholesale distribution of paints, and she does not understand anything about paints. So she decides that I just want to shut down the business. So in that scenario, what are the steps the legal heir needs to go about with? Now, when I'm talking about legal heir, I would like to make one thing clear, that the legal heir is normally finalized as per if the person is a Hindu, Sikh, Buddhist, or a Jain. It is decided as per the Hindu Succession Act. If it's belonging to Islamic religion, then it is by the Sharia law or the Islam law, Muhammad law. And for the Christians, it is the lineal descendant of the person of the deceased proprietor who are alive who will be considered as the legal heir. So The definition of legal heir is taken from the respective acts, and for normal parlance in discussion, we consider the person to be the next of kin, whether the son or the daughter or the wife, who is agreeable or who is agreeing to take over the business, and to take it forward or to close down the business, take on this primary responsibility of closing down the business. So what does the legal heir need to do if he wants to close down the business? First, he has to log in with his GST login credential. He has to log in into the portal, which is gst.gov.in. We all know. And once he logs in, so the question may come that how can we log in? Say we in this situation, we are considering the assumption that the legal heir has the user ID and the password, and with that user ID and password, he or she is logging in into the portal. And when he's logging into the portal, he can go to the services tab. From the services tab, he can go to the returns tab, and then to the track returns tab. So when he goes to the track return status tab, there he will be clearly shown as to what is the status of the return filing. So the legal heir has to first of all note down as to how many returns have been filed and what are the returns which have not been filed. Why do I say so? I will just discuss everything in some time. So the second situation may come in our mind that I don't have, okay, the legal heir may say, my father never shared with anybody his user ID and password. We don't know, we can't access his mail or whatever may be the situation. And friends, we have practically faced all these situations because whatever FAQs I've prepared today, these are all based on practical problems or practical situations faced by us. So we have just put in that. So if your user ID password is not available, you don't need to worry. Government has given us an option. You go to the GSTN portal, which is gst.gov.in. There you have a tab known as Search as Taxpayer. There you just give the GSTN number that you have. You will get the GSTN number from any of the invoices you have. So just give the GSTN number. With the help of the GSTN number, you can get both the things. First is the return filing status of the person, till which month he has filed the returns of 1 and 3B and everything else. And also, you can get the jurisdiction of the disease proprietor. So in the profile, when you go, the jurisdiction is mentioned as administrative jurisdiction. So if you see here, the administrative jurisdiction is shown, and if you see the administrative jurisdiction, that is the jurisdiction under which the disease proprietor's registration belongs to. So with these two particular things, you need to just note it down. Why? Because with this particular things, we need to go to the jurisdictional officer and visit him. And why do we need to visit the jurisdictional officer? Because as of now, this process of intimating the proper officer or the jurisdictional officer about the death of the disease proprietor is not made automated through the portal. So we cannot intimate the proper officer through online intimation. As of now, it is being through the manual declaration only, wherein go with this particular documents, wherein we have taken a printout of the registration certificate, we have taken a printout of all the returns filed, and we have also noted down the administrative jurisdiction of the particular SSC where he falls. If you can log in with your user ID and password, you can see that the administrative jurisdiction is highlighted in red. And if you get the administrative jurisdiction, it is very easy. You can go to any of the GST offices. They will guide you as to where that particular circle office or range office or state office falls. So when you visit the proper officer, what are the documents that you need to carry, right? So you need to carry the death certificate, the ID proof and address proof of the disease which you will be having, and ID proof and address proof of the legal heir, okay, of the legal heir. And when you take the ID proof, you need to take an ID proof which establishes the relationship between the disease proprietor and the legal heir. So suppose the son is going, he can take his PAN card along with him wherein his father's name is written. If it is his mother, in case of the son or daughter, they can take the passport, in which case most of the mother's name and the father's name are mentioned. If it is still not there, then you can take any bank account statement which you have jointly, or you can also take a certificate from your local, the corporators or the councillors they are known as. The municipal authorities, they can also certify you that your father's name is such, your mother's name is such, and they can give that certificate also. So, and apart from this, you also take the Aadhaar card, and you take all this particular things. And apart from this, in some of the states, they are also asking for the legal heir certificate. Now, what is a legal heir certificate? It is nothing but a declaration by a first-class magistrate wherein they certify that you are one of the legal heirs of the disease proprietor. So how do you get this? Normally, you take a family tree, as to if the legal heir has passed away, then the name of the wife, the children, and all other dependents, who are there. And then you take this and go to the first class magistrate's office and file a, notarial affidavit based on the declaration. They normally invite all the legal heirs to be present, and they take a declaration from all the legal heirs that, yeah, you're all the legal heirs, and then to that it is normally certified. And in some of the cases, it's also given by the local revenue authorities also. So this legal heir certificate is required only in some of the states. In most of the states, we are doing it only the death certificate, ID proof of the deceased person, and the ID proof of the legal heir. And also in some of the states, NOC is also being demanded from the legal heir. And what is this NOC going to state? This NOC, suppose there is a son, the daughter, and the wife of the deceased proprietor. In this case, the wife is becoming the legal heir who is shutting down the business. So in this case, the son and the daughter, they have to give a no objection to their mother, saying that she's being appointed as the legal heir, okay, to do all the GST formalities and close down the business. So that's a simple form of NOC that needs to be given in some of the states. So once you have all these primary documents, then what do you need to do? You need to visit to the proper officer's address, as you have shared, that you can get the administrative officer's address there. And along with this, the proper officer will actually verify all these documents. And then once he verifies all these documents, he is going to give the authorized signatory is going to be given a user ID and a password. Along with one more thing that he needs to give is the email ID and the phone number, as we give in case of new registration. So once he gives the email ID and the phone number, the authorized signatory, he will be given a new user ID and a new password. And as we do in the case of new registration, you have to just revalidate a new password. And with this user ID and password, the further process of cancellation and other processes that needs to be done. So the next question is how the cancellation application needs to be filed by the legal heir, okay, in case of closure. So just like in the case of normal cancellations that we are filing cancellation application, even in case of the legal heir, it has to be filed under section 29, and it will be filed as if the person who is alive, the deceased proprietor is filing the same. So all the compliances, the legal heir has to file as if he is being filing it on behalf of the legal heir. Okay, so what are the other formalities that need to do? It's recommended that you file all the pending returns, okay, till the date of the death of the proprietor. And another important thing, it is only recommended, it's not mandatory that you have to file all the pending returns, but it's recommended is that you file all the pending returns before you file the cancellation, though you have the option that, many times that whatever is pending, that you can file along with the GST at 10 also. You can give all the pending compliance all over whatever needs to be paid, that you can pay in the final return also. But it is suggested that you file all the pending returns, because normally what they do is they issue a show cause notice saying that these returns are pending. So file those returns and then only we'll do the cancellation. And another thing that we need to remember is that when you are filing the cancellation application, please write death of the proprietor as the reason for cancellation. Please keep this in mind, because if you don't do this, then what happens is that the compliances that happen in the later part, the show cause notices that come in the later part, they get confusing. Because in some cases, we have seen people saying that the business is closed, that's why I'm closing down, I'm surrendering the registration, I'm cancelling the registration. But that is a wrong reason to be given, which may create problems later on. So please keep this in mind. Give the reason as death of the proprietor as a reason for cancellation. And along with the cancellation, what do you need to give? This is all documents that we normally give in the case of cancellation, which is the death certificate, the ID proofs, the proof of bank closure is also asked at certain times, and also proof of business closure, like the trade license or the professional tax or the local municipality license in different states, as it is called. And also in some states, the indemnity certificate is also being sought from the legal heir, so that in case there is any liability coming at a future date, the legal heir will bear that liability. So the next question that comes to our mind is, within how many days we need to file this cancellation application? Because normally after the death in the family, it takes time to recover. There are some spiritual rights, there are some family rights, a lot of things happen. So do we strictly need to go by this 30 days rule? That is the question that comes to mind. No, friends, we don't need to do that, because Circular 69/2018, it has given us a relaxation saying that only in two cases, if the application for cancellation is incomplete, then in that case it can be rejected. And in the other thing is when the business is transferred to a new entity and the new entity is still not registered before applying for the cancellation of the old entity. In that case only the cancellation application can be cancelled for this shorter duration. So just because I find the cancellation application after 30 days does not give any ground to the proper officer to cancel my cancellation application. So please bear this in mind, because initially we got some show cause notices based on this, but recently we are not getting it. And this is the thing that I was sharing. Please don't share discontinuance or closure of business as a reason for your for cancellation. Please share death of the sole proprietor as a reason for your cancellation. Now, the next thing is, how do I reverse the ITC? As I was sharing, that when the deceased person was alive, he took in the ITC. Now, when he's no longer there, then what will happen to the ITC? Because I'm closing down the business. As you know, in all situations, whenever you're closing down the business, you need to return back the ITC to the government, whatever you have availed, whether you have utilized it or not. That is a different question altogether. So here, as per Rule 44, we need to reverse the ITC on the inputs, the semi-finished goods, and also on the capital goods. So on inputs, what is the ITC that we need to reverse? It is the corresponding invoices, proportionate invoice, the GST input that is there on the invoices that are availed, okay, which is lying in the closing stock, okay, or the output tax payable on such goods, whatever is the difference. So on that, whatever is the amount, whichever is higher, on that the ITC has to be reversed, okay. So I will just take, and also in case of capital goods, you have to reverse the ITC for the period which is not yet utilized. So normally we assume that there is going to be a 5-year lifetime for capital goods, and say you have used it only for 3 years, 2 years are remaining. So for those 2 years, you need to reverse the ITC, or you need to pay the tax on the selling value, on the transaction value of the capital goods, whichever is higher. So just to go for an illustration, in this case, it's a shoe manufacturing business, and they have produced 100 shoes at the rate of 500, which is saleable at 500 rupees, 500, and the GST rate is 12%, say, and output is 80, and closing stock is 20. So input leather, that is that they have purchased for this is 2 lakhs, and they have bought a plant and machinery for again 2 lakhs by paying GST of 24,000, and the machinery has been used for 3.5 years. When the transaction value is 50,000. So what would be the ITC reverse? In this case, for the leather, the leather, out of the total leather raw material that we bought, 20 are lying in my closing stock, right? So in my closing stock, the raw material and the closing stock that is there inbuilt is 20%. So 20% of the GST that I've availed, that is 7,200. And the tax on the output that I'm supposed to pay is 6,000. Since in this case, the ITC reversal that needs to be done is higher. So I will have to reverse the ITC that is lying in my closing stock, which is 7,200. In case of capital goods, what do I need to do? It's the ITC for the remaining period of 1.5 years is 7,200. Why? The total ITC available by me is 24,000, and total time period is 5 years, and 1.5 years is my remaining period. So what do? I actually have to pay 7,200 towards the reversal of the ITC. Okay, but if I'm selling the machinery, then on that my transaction value is 9,000. Since my transaction value is higher than the ITC that needs to be reversed for the unutilized period, I'll have to pay the tax on my transaction value. Now, the next question is, okay, I have got the amount. So how do I reverse the ITC on the cancellation of the registration? So the clear-cut rule is that I can reverse it by either debiting my electronic credit ledger or by debiting my electronic cash ledger, whichever is convenient for the taxpayer. But we just need to remember one thing here is that all the inputs, finished goods, semi-finished goods, and capital goods, the date that needs to be reckoned, Okay. Yeah, the PPT will be shared with you. Please don't worry, we will share the PPT with you. So the date net that needs to be reckoned is the date immediately preceding the date with effect from which the cancellation has been ordered. So in case of death of the proprietor, date of death is the date of effective cancellation. So please remember that whenever you are making this calculation for reversal of the ITC on the stock or the capital goods, it has to be the stock or the capital goods as on the date, the date just preceding the date after the date of the death of the proprietor. So that needs to be kept on the mind. It's not the date when I'm cancelling, I'm applying for the cancellation. It has to be just the day after the death of the proprietor. Okay. So whether
Arup, sir, sorry to interrupt you in between.
Yeah.
Could you please tell the slide where you're referring to, sir? Because the screen we're only able to see the slide FAQ 3, slide number 12, I feel.
Oh, okay. No, we are referring to FAQ 6.
Okay.
So is it okay? Now can you see FAQ 6? No.
Right now it's in slide number 2, sir.
Okay, so 3.
I checked out from my end, so I think it's moving from here.
Yeah,
So
it's
can you
moving.
check out?
Yeah, it's moving. I'll just check 1 second. So is this visible now?
No, can you just change the slide, sir? Let me know whether it is changing.
Yeah, I'll just. Yeah. Can you tell me which slide you can see now?
It's 4, sir. Slide number 4.
Oh, but I'm on slide 20 actually.
I think maybe you're not able to change this slide, sir. I'm able to change it here. We are in slide number 20, FAQ 5.
Yeah. So can you also change it, right?
Yes, sir. On the left side, you will be having the option there.
Yeah, I'm changing. Okay, is it visible now? FAQ 6 is visible? No.
No, sir. Is it fine if I could handle the movement?
Yeah.
Slide, I will change it accordingly.
Yeah.
Thank you, sir. Right now we are on slide number 21, FAQ 6.
Yeah, right. So whether ITC or the disease can be adjusted. So this is another important question that we get often from the legal heirs, that whether my father has around 10 lakhs of ITC in his. Okay, I think the slides are visible to everybody now. FAQ 6 is visible. Mukulji, can you ask the participants whether?
Yes, sir. Just let me check. Give me a second.
Yeah. Okay. So now, yeah, right. 21. Yeah, right. Okay, great. So thank you very much. So we are on FAQ 6. So whether, so now the next question is that a legal heir comes to us and says that my father has around 10 lakhs in the ITC ledger, great ledger, I'm told. So can I get the refund of that? Is it possible? So in that situation, we have to check whether the refund is eligible because it's accumulated credit because of the inverted duty structure, or because of export, with or without payment of tax, whether it's just accumulated because of that or not. Because if it is for reason other than inverted duty structure or exports without payment of tax, then in that case we cannot apply for refund, even if it's accumulated for whatever reason it may be. So in that case, we need to be clear that if any eligible refund is there, then we need to apply for that refund before we apply for the cancellation. Because once the cancellations are applied, then we cannot actually apply for any refund. So that's why it is suggested that if any refund is due for the for inverted duty structure or for exports without payment of tax, please apply that before the cancellation application. Another important question that we are often asked is whether the ITC that is there, can it be adjusted against any interest, penalty, fines, etc. that needs to be paid? No, as you all know, the ITC can only be adjusted against the tax payable and nothing beyond that. So we cannot adjust it with any other payment that needs to be made. So now we'll go to the next slide. So FAQ 7, whether unutilized cash balance of the disease can be adjusted or can be claimed as refund. See, as you know that any unutilized cash balance that is lying, So suppose I have to make the payment for SGST and CGST, but I have a huge cash balance in IGST. So previously it was a challenge that I had to claim for refund and then I have to pay CGST, SGST. But now fortunately we have the benefit of applying through PMT09. If we apply through PMT09, what we can do is we can transfer the balance from IGST to SGST or CGST, and from there we can make the payment for any outstanding liability of CGST and SGST that is there. So if any liability is there, excess balance is there, we can do that as a first step. But beyond that, if still there is some payment that needs to be made towards some liability and all, we make the liability for that, we make the payment for all the liabilities. Even after that, if there is some balance which is lying there in the electronic cash ledger, what we need to do is we need to apply for excess cash balance in any other category or excess cash balance category. For the excess cash balance that is lying in my electronic cash ledger, I would not suggest to say that you apply the refund and excess payment of taxes, because then they will ask for your return to return correlation, which is a bit difficult in this particular scenarios. So we'll go to the next slide. So So next slide is, if the cancellation application is filed, is there anything else which needs to be done, right? So yes, we need to tell the legal aid that since the cancellation application has been filed, as per Rule 21A, you cannot issue any tax invoice, neither can you collect any tax from anyone. So please be careful, don't do this. And why am I telling this? Because this is what the legal aids are doing. Even after we file the cancellation application, either because of ignorance or because they don't, sometimes they forget that the cancellation application has been filed, they are just issuing tax invoice. And what is the natural consequence of this? When the tax invoice is issued, the recipient is expecting that you will file GSTR 1, okay, and you will also show it in 3B. But what happens is your cancellation application takes place from the date of death, and so today, as on date, you cannot file any GSTR 1 with today's date. Okay, so in that case, what happens? There is a huge miscommunication, and then there are challenges that we face. So we need to update the legal aid saying that you cannot do any business, no invoices, and no charging of taxes. So we'll go to the next FAQ. So if the legal aid receives a show cause notice in relation to cancellation application, what we need to do? So this is another thing, because sometimes it happens that the legal aid, sometimes through Google and all those helps, they are filing the cancellation application, and then they get a show cause notice, and then they come to the professional. So in this situation, they tell that I'm not going to give any document. I don't know where it is, kya hai, where are the documents and where are the books of accounts. I'm not aware. So in this situation, we need to make you aware that it is just like any other show cause notice. We have to give submissions. We have to give the reply for whatever the department is asking for, and also within the due date. Because if you don't give within the due date, then maybe an ex parte order will happen and they may reject the cancellation application. So that's why we need to be vigilant in this case. We need to tell the legal aid that please give us all the relevant documents so that we can actually furnish the reply to the show cause notice issued by the department. So we'll go to the next slide. So now what happens? You have given the reply to the show cause notice. The proper officer is satisfied and he issues your cancellation order. So what do you need to do now? So you need to file GSTR 10 within 3 months from the date of cancellation or date of order of cancellation, whichever is later. So this is the formality that we do for all the cancellation, but this is more so important in case of deceased proprietor. Why? Because as soon as you give them the cancellation order, they just run away, and sometimes they forget that they have to do anything further. So whenever you're giving them the cancellation order, please tell them that this is also a responsibility, that you need to file GSTR 10 also within 3 months from the date of cancellation or cancellation of order. So now we'll go to the next slide. So what needs to be given along with GSTR 10? These are the basic documents which we need to give, or the information. The only information that you need to basically give in is the cancellation date, okay, and also the address that can be contacted to after the cancellation has happened. These are only things that needs to be given. Rest of the things are auto-populated. So we'll go to the next slide. So what happens if I don't file the RAT 10 within the stipulated time of 3 months? So if I don't file, firstly I'll get a notice in GSTR 3A, which is given to the defaulter, okay, under section 46, and they'll tell me that file the return within 15 days. So I just need to file it within 15 days. If I don't file it within 15 days, they'll give me a best judgment assessment under SMT 13 and tell me that this is your return, this is your payable, please pay it. within 1 month, okay, and comply. Or even if you want to file your return and comply, that is also okay with it. With us, we will drop all the proceedings. So if filing, we need to tell the legal aid that you either file the return GSTR 10 within 15 days of getting the GSTR 3A form, even if he's not doing it, and we are getting ASMP 13, let us see that within 30 days, we just file the return and send a reply complying to the ASMP 13 that is being issued to drop all further proceedings in that regard. Okay, so now we'll go to the next slide. So now this is another important thing that we face, that what happens is the legal aid. This is something which I would seek attention of the entire group, because this is very important, and we have been receiving some show cause notice, and I'm already filing a lot of litigation on this part also. So what is it that, now what has happened? The deceased proprietor has passed away, the cancellation order has been given, every GSTR 10 has been filed, and the legal heir he's thinking that everything is done. I've gone to the Ganges and I've just done everything whatever has to be done, had to be done. But then suddenly one day he wakes up and he gets an SMS saying that the show cause notice is issued. Please check your mail. And he goes to his mail and he checks that in 2018-19 there is a difference between 2A and 3B for this amount. So please give us the explanation for the same. And if you don't have any proper explanation, please deposit the same through DRC 03 within 7 days and comply. So these are the kind of notices that they are getting. So in this case, the legal aid said that my father had done the business. I just shut down the business. So why should I be aware? I should be concerned. What liability is coming for the government, after his passing away. Friends, during service tax, excise and customs, there is no machinery provision. So whether a show cause notice can be issued to a dead person, that is highly litigated, right? Which we may discuss in some time later on. But in case of GST, they have introduced a machinery provision through 93(1)(b). Okay, so what is there in 93(1)(b)? That is, the business is discontinued, whether before or after his death, his legal representative shall be liable to pay out of the state of the deceased, to the extent to which the state is capable of meeting the charge, the tax, interest, or penalty due from such person under the Act. Okay, so three things you need to be clear here. So the business is discontinued even then, whether before or after his death, his legal representative is liable to pay. Okay, from where? Out of the state of the deceased. So please try to understand, it is not from the own resources of the legal heir. Say the legal heir has fixed deposits for 10 lakh rupees and the liability is say 6 lakhs. So it does not mean that the legal heir has to withdraw his 6 lakh from his FD and pay this. Rather, suppose the legal heir has got something from the state of the deceased. When the deceased proprietor has passed away, he has left say around 20 lakhs in FDs and some amount in LIC, some amount maybe there's rental deposit with the landlord, some amount he got by selling the stocks. So by getting all this from the state of the deceased, he got say 50 lakh rupees. And now there is a demand from the department for say 5 lakh rupees or 6 lakh rupees. So since the 6 lakh rupees is covered by the state of the deceased, which is getting a 50 lakhs, this 5 lakh rupees has to be borne by the legal heir. Okay, and the main thing after this is whether such tax, interest, or penalty has been determined before his death but remained unpaid, or is determined after his death. So whether the determination of tax has happened after the death of the person or before the death of the person, that is irrelevant. Only thing which is relevant is if it is payable as per law. Of course, we need to fight it, and if it is not payable, then we need to go for appeals and all. But if it is genuinely payable, then the legal heir is bound to pay it out of the state, whatever he has received from the deceased proprietor. So with this, we have closed on the option 1. So now we'll go to option 2 in the next slide. Yeah, so here the legal heir wants to continue with the business. So we'll go to the next slide. So what needs to be done to continue the business? First, the legal heir, he needs to register a new business, right? Okay, and when he is registering the new business, he needs to mention that this is the transfer of business due to death of the sole proprietor. There is an option given while filing or registration. There is a reason that says that you can mention this reason. Please mention that reason. Otherwise, when you transfer the ITC at a later stage, that is going to be disputed because we are also filing a litigation in that regard also, right? So what needs to be done after that? The legal heir needs to file all the returns that needs to be filed for the old registration. Then after filing all the returns, whatever ITC is due and legibly eligible, then that needs to be transferred to the new business. And once the ITC is transferred to the new business, then the old business needs to be cancelled. Okay, so this is the process flow that needs to be followed. So we'll go to the next slide. Yeah.
Arup sir, it is 540, right?
Yeah, 540, sir.
Yeah, okay. So this is the next slide that I was saying, that you just have to be registered from the date of succession. So you just need to get the new registration done as you get for any other new registration. So that is a simple process, only mentioning death of the proprietor here. Next slide. So these are the documents that we give for new registration. This does not be warranted a discussion because all of us know it. So next slide. So can a legal heir transfer the excess ITC? Yes. There is a lot of dispute on this, that whether it can be transferred or not. Finally, through Circular 96, the SEBI has come up and said that yes, you can transfer the ITC which is lying in the account of in the ECL of the death proprietor, and you can deceased proprietor can transfer it to the new business. Next slide. So what is the precondition? Please remember that the precondition is that the transfer of liabilities has to happen, because 18.3 has to be followed. And if the transfer, when you're transferring from the deceased proprietor's business to the new business, all the assets and liabilities, they need to be transferred to the new business, or else the ITC cannot be transferred, because this is one of the preconditions of section 18.3. You need to remember that all the liabilities of the business of the deceased proprietor, they need to be transferred to the new business also. Unless and until that happens, then the ITC cannot be transferred. Next slide. So what are the documents that need to be given? This is general that we give in ITC 02 for any 18.3 situation, which is we need a CA certificate or a CMA certificate saying that the transfer has been done with a specific provision for transfer of liabilities. This needs to be assured by the professional. Next slide. So can a legal heir transfer the excess unutilized cash balance to his new entity? No. In case the business has been transferred to the new entity, the cash balance that is lying in the electronic cash ledger balance of the old entity, that cannot be transferred. Only the electronic trade ledger balance can be transferred. So after you make the payment of all your returns and all, what you can do is you can actually just apply for refund as excess cash balance in electronic cash ledger, or under any other refund mode as refund only. But you cannot transfer it to the new business. Next slide. How the cancellation application needs to be filed. This we have already discussed. Now there are a few slides which I have kept in repetition, so that whenever you are following the PPT, you get the complete set in each of the sets. But for the since I don't need to repeat all of them, so I'll skip some of the slides. So this is the slide that we have already discussed. This also we have discussed the documents, and yeah, this is done. This is also discussed. This also we have discussed that within 30 days you need to apply, but again it is given relaxation that you can always do it. This is you have to mention death of sole proprietor. Next slide. So what needs to be done? No invoices can be issued, no charging of tax can be done. So that needs to be told to the legal heir. Next. So if no show cause notice comes for cancellation, you need to give the documents that you need to to satisfy the proper officer. For cancelling the old registration, you need to give all those documents. Next. So what you need to do after that, you need to file the GST at 10 within 3 months, as I've just shared, within 3 months of the date of cancellation or date of order of cancellation. Next slide. So these are the documents that we need to give with GST at 10. This we have already discussed. So if it is not filed, then you get a notice saying that file the return. If you don't file the return within 15 days, the ASMT 13 comes. And if you don't file the ASMT 13 within 30 days, then they'll take action, but normally we file it within 30 days from the date of ASMT 10. Next. So this is the final point on which maybe I would like to give 2 minutes, because this is a very important thing. And here also we are facing a lot of litigation. So what has happened in this particular case? I'll give you a live example. So this was a boutique, okay? And it was a chain of boutiques for 10 boutiques. The lady was doing wonderful business, but unfortunately she passed away. And her daughter, who was actually in IT. She was working with one of the leading IT giants. She decided that she'll take the plunge into business, and she took the plunge into business. And what she did is she got the business transfer from her mother's name to her name, right? She did that. But what she did not do is she did not transfer the liabilities of the business. She just took in some of the assets. She took some of the outlets. She took the secure deposit of the outlets in a balance sheet. She took the assets that were there in a balance sheet. She took all this, but she did not take the liabilities worth about 6 lakhs or 5 to 6 lakhs, which were for small creditors. Somebody who's doing this labor job, somebody who's doing the tailoring job, and things like that. So what she told them is that my mother is no more, and this is such a small amount for you, 30,000, 40,000, 50,000 odd. So I'm not going to pay you all this amount. So please forgive me and forget it and do these things. So what happened ideally is that when the transfer took place, she just transferred all the assets and she took some of the liabilities, some of the petty vendor liabilities. She didn't take the liabilities. And also, in case of the business and all, when she took the business, she took some of the employees, she didn't take some of the employees. So it was taken in this form. So ultimately what happened is that she transferred the electronic credit ledger balance that was lying in her mother's account. So it was quite substantial, around 16 lakhs odd. So she transferred that to her mother's account and from her mother's account to her account. But here, when after about 1.5 years, she gets 2 notices. One, saying that the transfer from a mother's account to her account is taxable, it is not exempted. Why it is not exempted? Because the transfer has not happened under the going concern. Okay, as a going concern. Why? Because the exemption given for transfer as a going concern under entry 2 to notification 12/2017 is only when the going concern is transferred as a whole or as an independent part. So you cannot transfer bits and pieces of the business to there. Now, one important thing is what is a going concern that has not been defined under the GST. If you go to the General Clauses Act and the other definition, we get an idea that if it can be independently run, then the business can be said to be a going concern. But for the sake of litigation, it has become a litigating point. And so I would suggest and request everyone that whenever such transfer is happening, please bear in mind that 2 important things to be kept in mind, that we need to make the transfer in such a way that it is a transfer as a going concern, so that the transferor does not suffer GST, and also the ITC that is transferred to the transferee, that is also not needed to be reversed, because it is in violation of section 18(3), which clearly says that the ITC can be transferred only if liabilities of the transferor are also transferred to the transferee. So please be careful about this particular thing. The last slide. So now if a legal heir receives a show cause notice, general show cause notice, just as I shared, after 2 years. So what happens? So in this case also, the legal heir will be bound to pay whatever is legally due from the deceased proprietor, which has been determined either before or after his death. Why? Because he is continuing the business. So here there is no restriction or limitation up to the state of the deceased proprietor. It's an open-ended thing. So please be careful. We need to tell the legal heir about this particular aspect, that if you're continuing the business, and even if a past liability comes, even if a past liability comes, a show cause notice comes, you have to respond to that. And if there is a liability which is determined, that maybe, then you need to pay that also. Why do I say maybe? Because there are a lot of litigations on which, which is there, the Shabina Abraham case. You may refer to that particular case, and I will include it in the appendix for the sake of discussion. So you can go through that particular matter where it has been said under service tax, excise and customs in a number of judgments that show cause notice cannot be issued in the name of a dead person. But here, though it's there in the machinery provisions, show cause notice can be issued, but then it is an aggressive decision that you need to take whether you will fight it or not. So with this, thank you very much. I will close my discussion here. I've taken about a minute more. So now I'll hand over the discussion to the organizers. Yeah.
Thank you, Arup. There were a couple of questions which our viewers have asked. I will be sharing those with you for your responses here. So the first question is, how do we transfer the stock lying to the legal heir in case legal heir continues the business? Should we pay tax on it?
Okay, so that is a question that I've already answered in my last slide, in slide 15, I think. So you have to transfer the entire business as a going concern. So whatever stock, whatever assets, whatever is there in the old business, we need to ascertain the entire balance sheet as on the date of death, and we need to transfer the entire thing to the new business, and we don't need to charge any tax, because as per entry 2 to notification 12/2017, that is given as an exemption when you transfer the entire business as a going concern to the new business. So whatever stock you're transferring, entire thing, you make it into one thing only and transfer it to the new business. So what happens is there no GST needs to be borne on that particular stock.
Thank you, sir. So the next question is, legal heirs of the deceased person have continued to raise tax invoices after his death. Is it right or wrong? If wrong, what should be the rectification actions to be taken?
Okay, so this is a very good question that this is already thing which I have already faced, and we are actually fighting the litigation in this case. So actually it's legally non-compliant action, because as we know, after the date of death of the deceased proprietor, not even one invoice can be issued in the name of the dead proprietor, because the number is no more in existence. But having said that, if I have actually issued a particular tax invoice and I've collected the tax invoice, then what we are doing is we are making that payment in the final return. Okay, so we show that particular, but only one challenge you will face is that in this particular thing, if that the invoice is issued after the date of death, in case of GSTR 1, you cannot show it in GSTR 1. So if it's a B2B sale, then you face a hardship. Or what we are normally doing is we are showing that invoice on the date of the deceased proprietor itself, and then we are filing the GSTR 1 return, and in GSTR 3B we are filing it and we are paying the taxes. So that is not becoming a challenge, but GSTR 1 becomes a challenge if it's a B2B situation. So we are showing it on the date of death of the proprietor and just filing the GSTR 1. So there may be minor timing differences, but ultimately the client, the recipient, is getting the credits. I think so in that case they are not facing any problem. But if it's a B2C situation, in that case what we are doing is we are paying the payment to DRC 03 also, because we don't need to keep it in the 1 and 3B situation after the date of death of the proprietor. So what we are doing is that this is a tax wrongly collected, so we are just paying it voluntarily to the government. So that's what we are doing.
Thank you, sir. So the next question is, if there is a stock lying on the business of the deceased and there is no balance in the credit ledger, do the legal heir need to reverse ITC already claimed on closing stock and discharge the liability?
Yes. Yes, actually what happens here is the ITC, what we are discussing about is the ITC that is included in the stock lying, as on the date of the death. So it does not matter whether there is any balance lying in the electronic credit ledger or not, because it may so happen that I have purchased the stock 2 months back, and that credit I have already utilized to offset my output tax on before 2 months. So I may not be having it in my electronic credit ledger. But what the government essentially wants is that if any element of input credit is built up in my stock, which is there on the date of the death, so I have to reverse ITC on that. That is what the government's intention is. So even if I'm not having a balance in electronic credit ledger, I have to make the reversal through my electronic cash ledger only. That's why it has been clarified through Circular 69 also.
Yes, sir. So what should be the date of registration for the legal heir when he applies for registration if more than 30 days have elapsed from the date of death of the proprietor?
Yeah, so very good question. Thank you. So in this case, please remember that in case of the success of the legal heir, the date of commencement of business, the date of liability will be from the date of death of the proprietor. So even if 30 days have gone by, please don't worry, because as in case of cancellation, they have given a relaxation. In this particular case, that's why we are saying that please be mindful, please be careful that when you are applying for cancellation and when you are applying for the new registration, please mention the reason as death of the proprietor as the reason, because then all these hardships of applying beyond 30 days, that gets exhausted, that they get exempted and they don't normally raise questions because of that.
Yes. So is there a specific format for CA certificate in case of ITC 02?
Yes, there is a specified format. I not say specified format, but it is a suggested format which is issued by our institute ICAI. You will get it in the compendium of the certificates that we have. ICAI has come out with a compendium of all the probable certificates that a CA can issue in relation to GST. So in that you can get a format of the certificate to be issued for ITC 02.
So the next question is it legally valid to file returns through OTPs received on the deceased's mobile number without transferring the business or registration, as OTP validation will amount to deceased person filing the returns?
Yes. Yeah, thank you for asking this question also. See, this is highly illegal, and I'm telling you, I'm presently fighting show cause notice of around 7.5 lakhs, only because the legal heir, the son of the proprietor, he used his father's OTP to file the returns based on the consultant who was there was actually suggesting. Why do I say so? Because the return was wrongly filed, right? And they have taken excess ITC and a lot of other mistakes have been there. So now when we're taking the ground that the proprietor was not there and the son is ignorant about the laws, he has taken. So they are saying that you have filed it with the OTP. So that means you have actually created a wrong there by filing the return through somebody who is not in existence. So that's why we would suggest that please don't file any return or anything with the OTP. We are also seeing cases wherein people are filing these authorized signatory changes through the OTP of the deceased. Please don't do that. We have already given recommendations. We have already given representations to the department saying that this process also needs to be automated, where the legal heir can intimate the department online. But till that, please go physically visit. Don't do through OTP because it is not legally valid once the person is deceased. Okay, so in that case, the department is taking the stand that even the legal the deceased person is not there, the legal heir has filed the return through the OTP. That means he or she is aware about the things, so they have to face the consequences.
So, can ITC lying in the electronic credit ledger be claimed as a refund when the stock lying in the shop has expired and there is no continuation of business on account of death of the proprietor?
No, this is something that I've already handled. In the FAQ, you'll find it. If the ITC is only lying because of the inverted duty structure or because of export without payment of tax, only in these two situations, which are governed by section 54(3), subsection 3, only in these two situations we can claim refund. Other than this, we cannot claim refund only if the balance is lying in electronic credit ledger, because I have a lot of idle stock in my showroom or in the business. Because of that, the ITC cannot unfortunately be claimed as refund.
Right. Yes, sir. So one more question is, since a tax invoice cannot be issued subsequent to the death of the proprietor and tax cannot be charged, does it mean that there should not be any movement of goods at all?
Yes. But to my yes, there is a no also. I'll tell you why. Because as on the date of the death of the proprietor, if there is any goods which are in transit, through waybill or through some other way, however possible, they are already in movement, that movement may continue. But no fresh movement can originate after the date of death of the deceased proprietor. Because technically speaking, once the person has died, after that date, no further taxable supplies can be made by the deceased or in the deceased person's name. So that's why no movement can originate. Even after, suppose what has happened, I'll tell you in one practical situation. It's a fabrication plant. They have made the invoice 3 days before the death of the proprietor. Okay, and it's a huge machinery. It costs around 16 lakhs. Now, since it's a huge machinery, the son, he did not want to get entangled in the working capital problem and all. So what he did is that he made the invoice just after 2 days of the date of the death, and he issued a UV bill and all. So all these cases, they later on become a problem. So that's why it is best suited that we don't just do any movement in that particular situation.
Sir, with respect to the OTP question that was raised earlier, there is a continuation to that. If we are not supposed to use the OTPs, I mean, generate the OTPs through the deceased person's mobile number, how do we file all the pending returns before applying for cancellation?
Yeah, very good. See, I've already discussed this in my FAQ 1 and 2. If you go through the FAQ 1 and 2 of both the options, or rather the first option, I've discussed that, wherein the legal heir, once establishes that he is a legal heir, Okay, he's going to take the death certificate. He's going to take the ID proof and address proof of the deceased proprietor. He's going to take the address proof and ID proof of the legal heir, wherein there's a relationship being established between the legal heir and the deceased proprietor. And in some states, they're also asking for the legal heir certificate and also NOC from the other legal heirs. So you need to take all these 5 things and your email ID and the phone number of the legal heir and go and visit the proper officer and tell him that this is a situation. I need to generate, you need to generate a new user ID and password in the name of the legal heir. And then the proper officer is verifying all the documents. And normally within 7 to 10 days, they issue a new user ID and a password, which will go to the email ID of the legal heir. And then from there, as we get in case of a new registration, you can generate a new user ID and a password, and then file all the pending returns, cancellation of the returns, or transfer of ITC, whatever has to be done, it has to be done through that user ID and password.
Noted, sir. So in case of a company or a partnership firm, the authorized signatory, being the director or the partner, has deceased. How to change the authorized signatory, sir?
See, in this case also, in the case of a company or in a partnership also, in case of, there is only one authorized. If there are multiple authorized signatories, then any of the other authorized signatories can do the change. That will not be a problem. If say Mr. A and Mr. B both are directors and both have been added as authorized signatories, which we are now telling to do. Even in case of partnership, we are getting all the partners, added as authorized signatories. Even in proprietorships, now we are trying to add, additional authorized signatories to be added there. So having said that, so suppose if only one authorized signatory was added as a director, and unfortunately that director has passed away, then even in that case, the similar process to be followed. That the deceased director's death certificate has to be taken, and a board resolution wherein the thing has been acknowledged that he has passed away, and because of that, his resignation is being accepted and all. With this, you need to visit the proper officer. Then the proper officer will give you the the ID in the name of the new authorized signatory, and it will go in the name of the new authorized signatory. Then the authorized signatory will be added. Or in some cases, in most of the cases rather, what the proper officers are doing nowadays is that they are adding the new authorized signatory through their portal itself, through their ID. So suppose Mr. A has passed away and Mr. B is the new director. So you go to the proper officer with the death certificate, the board resolution and authorization letter in your name to the proper officer saying that this is the change that needs to be done. The proper officer will validate all the documents, and then he will upload all the documents, the photo, the ID proof of the new director and all, and then he will make the new director the authorized signatory there itself. That is how it's being done in most of the states.
So one last question. As ITC 02 is the form to be filed for transfer of credit, is there a specific form to be filed for transfer of stock only?
No, there is no form basically to file that for transfer of stock. But what you do is when you are transferring the stock, I would request you to kindly keep a total detailed record of the stock, what you are transferring, because we are fighting litigation wherein these points are also disputed. That the stock was this, and then you sold the stock in cash, you transferred this credit, but how can you transfer so small, so minimum quantity of stock and transfer so much of credit? So to counter all these questions, please keep all the details of stock, assets, whatever you're transferring, the liability that you're transferring. Rather keep a detailed balance sheet as on the date of transfer ready for for investigation at a later date.
Right. Yeah. Thank you, sir. Those were the questions that were posted by members. I request CA Amar sir to propose the.
So, Mukulji, I'll take just 2 minutes more.
Yes, sir, please.
I'll take 2 minutes more. So, I'd just like to share about one important thing, about one question I was expecting, but somehow it is not there. And the thing is that in service tax also, we are getting show cause notices, right? For service tax and excise. Mainly for service tax, we are getting show cause notices for difference between 26 As and ITR, right? Even we are getting for dead people also, persons who have no more existence. So in that case, please remember that in case of service tax, excise and customs, there is no machinery mechanism that is there in GST as in embodied in section 93. So please refer to the matter of Shabina Abraham. If you go to the next slide, Mukulji, it is there as a part of the appendix. Can you go to So I'll share it with my presentation also. So yeah, I've given all the case laws here. So in this particular case laws, you can refer the case laws wherein you can fight in all service tax, excise and customs matters. If any show cause notice comes in the name of the deceased person's name, then that it cannot be eligible. No show cause notice can be issued. So please don't reply to it and don't take it forward wherein they issue an order, then you file the appeal and all. And even if any appeal is pending against a deceased person, even that can be dropped by just submitting a simple reply saying that by going by Shabina Brand matter, we would like to get all the appeal matter dropped. So I just wanted to highlight this particular point. Thank you very much. And over to sir.
Yeah, sir. Thank you for your wonderful session, sir. So good evening, everyone. I am honored and lucky to have been given this opportunity of introducing as well as giving a vote of thanks for today's session. I would like to thank Mr. CA Arup Dasgupta for explaining the procedures and compliance to be carried out under GST laws in case of death of a proprietor in such an extraordinary and a simple way. I would like to thank our president at KCA, CA Kumar S. Chigajini and CA Vijay Kumar Patil, Chairman IDT Committee of KSCA, for being ever supporting and encouraging to conduct such sessions. I would also like to thank CM Mukul and Vinayak Bhatt, the members of IT Initiative Committee, KSCA, for their support in handling all the IT related requirements for this session and all the sessions conducted previously. I thank KSCA for taking up such a wonderful initiative and organizing such a knowledge and very important webinar today. Finally, I would also thank all the attendees for being part of today's webinar. So I would again thank everyone again for making today's webinar a success and request you to stay home, stay safe, but be connected and connected for continuous learning. Thank you one and all. Thank you, sir.
Thank you very much. Thank you to KSCA for the wonderful opportunity. And thank you, of course, to all the participants who have shared wonderful questions also.
Thank you, sir.
Thank you, Mukul. Thank you, sir. Thank you very much.
Thank you, sir.